Hello, I'm Tim Winter, Portfolio Manager for the Gabelli Utilities Fund and longtime utility analyst. I want to highlight today why utility stocks are just beginning to heat up. Let's start with the big picture. Interest rates. The entire yield curve remains elevated relative to the past 2 decades. The 10-year U.S. Treasury yield is coming down, but it had risen as high as 5% when utilities bottomed last October. Recent data indicates the economy may be slowing faster than hoped for, and inflation's moderated and the labor market's cooled down. The Fed had outlined 5 rate cuts over the next 18 months and 9 times over the next 2 years, but it could have to move faster than that. A lower yield curve would benefit utilities. It would mean lower capital raising costs, higher valuations, and some customer bill mitigation. Utilities yield nearly 4% today and tend to raise the dividends every year. Another upcoming catalyst is the end of the election year rhetoric, especially regarding climate change and energy policy. Concerned that there could be major changes will be over by the end of the year. The transformation to a low carbon economy is going to continue in earnest under most election year scenarios, at least in our opinion. Moving to utility fundamentals. Electric demand is on the verge of an acceleration, one that we haven't seen since the 1970s when central air conditioning was being introduced. Artificial intelligence, AI data centers, manufacturing onshoring, electric vehicles, all of these things mean a power surge is coming. At the same time, coal-fired power plants are being retired. Questions abound as to whether the power supply can keep up and whether the grid can handle it. The U.S. and the world need more energy, need more power, and need more energy infrastructure. The good news is utilities make money by investing in infrastructure. The dynamics support long-term earnings per share and dividend growth. Currently, utilities are expecting about 5 to 7% earnings per share and dividend growth over the next several years. When you combine that with the 4% current return or yield, you get almost a 9 to 11% total return. Now let's talk ongoing consolidation. The utility sector has been consolidating since the mid-1990s. We've had over 125 deals. We've had 3 announced this year. Elite is being bought by Global Infrastructure Partners. Avangrid is being bought by Iberdrola. And Atlantica Sustainable is being bought by private equity. The large infrastructure funds are scouting the country looking for infrastructure assets. For all of these reasons, utility stocks are heating up, and we think the fundamentals support long-term healthy total returns.